Global stocks once again under pressure this morning following a massive sell-off amid growing signals of a possible recession. Stocks in Asia closed mostly in the red following major selling on Wall Street yesterday. The Dow suffered its worst performance of the year on Wednesday, plunging 800 points. The S&P 500 and NASDAQ also facing heavy losses, both shedding around 3% of their value. The growing volatility in the market stems from the bond market sending warnings of a possible recession. The yield on the 10-year Treasury briefly fell below a key marker for the first time since 2007. That so-called inversion has correctly predicted many past recessions and is considered one of the strongest indicators of trouble ahead. Let's bring in CNBC's Dom Chu. Dom, what happened yesterday and what's it looking like this morning?
All right, so what happened yesterday, Willie, you encapsulated it perfectly. The interest rate picture right now is one that is typically, in years past, shown that a recession is somewhere in the offing. The issue now is when that recession comes. But that idea that the U.S. economy could be slowing down markedly is the reason why you saw the Dow, the S&P, and the NASDAQ fall by as much as they did yesterday. A lot of that fear has to do with this idea that investors and traders are now handicapping or trying to predict more slowdowns ahead in the U.S. economy. In those kinds of environments, people will flock to the safety of U.S. government debt. When people flock to the safety of U.S. government debt, interest rates start to fall. And in those situations, that's where you start to see a recession fear possibly coming back in the marketplace. Now, the continued worry today, we've seen a deterioration in the market so far this morning because in addition to what we saw yesterday, two big pieces of data or headlines came out in just the last hour. Number one, the Chinese Ministry of Finance is reportedly saying that it will look for necessary countermeasures against the U.S. for those tariffs that go into effect on September 1. Also, Hong Kong has said that they will now take down their growth forecast for the rest of the year because of the protests and the lingering issues there. All of that, Willie, is what's playing out in the market. So a bad day yesterday is now going to be perhaps a little bit even more worse today.
So, Dom, let's talk some policy. How much of this can be chalked up to the trade war between the United States and China and the tariffs put in place by President Trump?
Well, it's probably fair to say at this point a good portion of this is being attributed to the trade war, the uncertainty about policy with China, and of course you throw Hong Kong in the mix there from a geopolitical standpoint. This is a stock market that is currently just about 5 or 6 or so % away from record high levels. So this is in no way any kind of a panic situation. However, there are those investors out there who believe that given the current set of circumstances, because you don't know what trade is like going to be with China, you don't know what the market and the economy are going to look like 6, 12, 18, 24 months from now, that it is worth taking down the value of some of the markets out there. And that's the reason why you're seeing some of those moves lower today as well.
Yeah, Germany having its troubles with the economy, China as well. So, Jonathan Lemire, the president on a wild tweet storm yesterday as these markets were tanking, blaming the Federal Reserve Chair, talking about his good relationship with President Xi of China. Is there some recognition, at least, did we see yesterday when he announced that he was going to pull back on some of the tariffs, that perhaps his tariffs are part of the problem here?
The president is consistent about very few things in his ideology. One of them is his belief in tariffs. The problem is he's consistently wrong in terms of who pays the price for these, and it's American consumers time and time again. And there is some suggestion from the White House, there's a growing belief that what he has done, his trade war here, has impacted the economy here and is slowing things down. And there is great fear among himself and his advisors, according to all of our reporting, about what could happen next if this gets worse. You saw it almost like a panic surge of tweets yesterday. The Federal Reserve is always his scapegoat. Even yesterday, of course, they were the #1 place where he was assigning blame for what was happening. But there is a recognition that there are other things at play here. And we have seen him, and this is in part has muted his response to these Hong Kong protests, as he's so afraid to upset President Xi in China because his eyes on the ball on what matters to him, which is this trade dispute. And there's a sense that that he has told people around him that were he to go to really criticize Xi's handling of what's happening in Hong Kong, stand up for sort of American values there, which a lot of his predecessors would have done, really assert themselves in this moment, he's pulling back. He urged the President Xi to treat them humanely, but otherwise hasn't really said anything with any sort of strong stuff because he's afraid that if he does, it could really scuttle things in as a trade negotiations continue this fall and winter. And certainly there's a recognition that if the economy really does slow here, if there is a real signs that a recession is coming, that undermines what is in his belief, the best argument for his reelection, which is that he's overseen a strong economy. And he certainly ties it to a booming stock market. And if the market continues to fall and the economy slows down, he knows he's in trouble.
Yeah, at least through all the storms of this presidency, he's always come back to the economy. Low unemployment, still true. Consumer confidence, still true. But if the global economy, including the United States, is taking a step toward recession, what does that mean for this presidency?
Ooh, it's political suicide. I mean, Donald Trump's political strength is premised on the idea that he has maintained and protected and cultivated a strong economy. His supporters and detractors overall agree that the economy has been pretty good the entire time of his presidency. Whether it's benefiting from Obama, that's another debate. But you talk to voters and they love the economy right now, and that drops off. It becomes much harder to excuse away the underlying instability and racism of the administration and Donald Trump's constant statements. It just becomes much harder. There no longer is the excuse, I'm a Republican who supports Trump because I like the economy.
Right.
That's a lot harder to say.
Yes.
What happens, I guess, is how much confidence can the president restore in the economy? And by talking the way he does and looking slightly panicked, does that actually undermine confidence in the economy? I mean, John Meacham, when you see the president take on his own Federal Reserve chairman, I mean, I keep having to reread that tweet because it's so unusual to see a president talk about their own Federal Reserve chair as clueless in public in the way that he does. But it's hard to think that the tone of the president's tweets in itself is stoking confidence. And as we know, to a large extent, markets depend not just on underlying facts, but they depend on confidence as well. And I don't hear a lot of confidence coming out of the White House right now.
Well, markets can be irrational, and we have an irrational president, so at least those two lines have intersected fairly briefly here. Of course not. I mean, one of the things that you heard so much going into 2016 was that the financial people were, despite some policy differences, believed that Secretary Clinton was a known quantity and that was a factor of uncertainty that they could take off the table. Trump was uncertain. And so one of the things that makes that kind of wisdom questionable is that's been the case for almost 3 years now, and the market's gone up. Seems to me both the political and economic reality of the moment is, from what I can tell anyway, is that many companies have done a good job of controlling costs. They're bullish, but not crazy bullish. And if there's a pullback, two things happen. One is if working class folks have a harder time finding jobs or keeping the jobs they've got, then they're going to look to the political system and wonder why the president didn't deliver. And to go to Elisa's point, if the well-off are seeing their portfolios go down by a significant percentage because of all these factors, then he begins to lose the tax cut Republicans. So any way you look at it, it's not a bright picture for him, and more important, for the people who work and the people who create wealth and the state of the nation, which is the really important thing.
And again, the president, when the economy's good, he wants credit for it. But yesterday was the fault of the Federal Reserve Chairman.
Thanks for checking out MSNBC on YouTube, and make sure you subscribe to stay up to date on the day's biggest stories. And you can click on any of the videos around us to watch more from Morning Joe and MSNBC. Thanks so much for watching.